Global equities are ending the quarter with a whimper, slumping 20 basis points in the 3 months through today. European stocks have been able to eke out a gain, but investors are still gearing up for a volatile end to the year. Here with a fourth quarter look ahead is Bloomberg's Dani.
And the most important thing to keep in mind here is that European equities, they have outperformed this quarter, a nearly 2% gain over the past 3 months, and that's beating out all of their other developed market peers. But do not let that return fool you, because we're still seeing investors position themselves very defensively, gearing up for the fourth quarter. More than $1 billion they've poured into low volatility ETFs in Europe. That's the most popular smart beta style out of any in the third quarter, and now their AUM is at a record. This defensive play makes a lot of sense to some degree. We have an ECB decision coming up, Brexit also coming in this quarter. Speaking of Brexit, falling more than 3% through Friday, this has been the worst quarter for sterling in 5. So you have a lot of macro concerns, not the least of which is economic growth. Definitely a dark shadow likely to weigh over these markets. We've seen economic growth fall behind the wider global market when it comes to Europe. So this is the Citi Economic Surprise Index, deeply negative. But to really understand what this negative 75 means, I have to take you into the charts so we can get a comparative view. Because when we look globally, which is this blue line, we can see that the economic reading, the surprise index, briefly turned negative around 0, which means that the readings, they've largely met analyst expectations. In Europe, though, is really the opposite. In the white, you see this very sharp decline. In other words, that economic data keeps disappointing, especially in the manufacturing sector. So later today, we get employment numbers for the Eurozone. But overall, this really underscores the difficult macro environment for Europe heading into the fourth quarter.